G'day folks, welcome back to another update for high-grade copper and US crude. Now copper is giving us a somewhat bullish momentum, but do watch that divergence showing up on the hourly chart, and US crude oil continues to consolidate, so not really strong to go long or short at the moment. Also hit that like and subscribe button to support the channel, and if you want to get a deeper dive into some of the trading strategies and disciplines, reference a +1 video attached to the links in the description below. Copper is supported by structural long-term demand for energy transition, but faces economic headwinds in the near term, so it looks cautiously optimistic. Oil faces more constraining supply demand fundamentals right now. Despite occasional supply shocks, the dominant trend suggests limited upside and more downside risk. So for high-grade copper, first off on the weekly chart, both the CCI1500 and the price are above the moving averages, giving us a bullish momentum if you're trading on the daily. And if we go to the daily chart, that's likewise bullish at the moment. Both CCI and price are above their moving averages. And it's a nice little bullish trend so far. However, on the hourly, they've both broken to the downside of those moving averages. So avoid going long at the moment until, if you're trading on the hourly, that is, until you see these both break to the higher points above the moving averages. Also note we've got this bearish divergence, lower highs on the CCI versus higher highs on the price. And if we draw a Fibonacci retrace target as a minimum, you can see there it's already hit that 23-38% range. In that little range there, the 23-38 Fibonacci range, it's already touched it and hit it. So here, theoretically, it could actually bounce from there and go higher through that resistance. Or at the moment, the CCI looks a bit bearish, so it may actually fall further. And for our back test, we've got the hourly chart here, and we've started it back here around about the 28th of August this year. And basically the way this works is you trade in the direction of the daily chart. And here also when you see the moving averages of the CCI and the price break above and moving in an upside momentum, you take long trades and you close it out when they both start turning down. You can see there it turned down on the price and also turned down on the CCI, and follow that trend throughout. Now you can actually pull back and average down a couple of times. You can see there it averaged down a couple of times there when the price pulled back. And again, you've got to be careful of how much you let it drop before averaging, and don't average down too much because you will get an impact on your drawdown on your account. Here, for example, we've seen a bearish divergence. I've actually had a few in there. And at each one of those points, you would have closed it out when you started seeing a downturn. So you would have closed it out the first point there, go long during that period, close it out again to the downside when you see the moving averages turn down there on the CCI and the price. They both turn down and you would have got out, maybe holding a position there, but that would have avoided that little drawdown. Again, going long when they both started increasing or going up. And then here finally, you would have closed it out the very latest when that moving average on the price started turning down, as well as the CCI moving averages, and plus you had this bearish divergence, and you would have avoided that drawdown during that significant drawdown there. At the moment, you'd be probably closing out your trade of long positions because that's starting to turn down. The CCI is already down, and plus you've got this bearish divergence as well. So ideally, you probably should be closing your long positions at this point, at that level there. So for US crude on the weekly, we've got a bearish momentum on the price, as well as the CCI, although the CCI has pulled back towards that moving average, so giving us a slight retrace at the moment, but nothing too much to be concerned about. There could have been possibly a bullish divergence there, but I'm not going to count it because that low is still higher than that low on the price, and so is that low on the CCI. So at the moment, bearish momentum on the weekly. Going to the daily, that's also somewhat neutral to bearish. The price is still declining, although it's hit that moving average range. And the CCI had a bit of a break to the upside, but actually pulled back in that moving average range as well. So again, I'd like to see this break higher on both the CCI and the price to give us more confidence. And as well, especially I'd like to see these moving average bands turn up like they did back here and start widening like they did here. Give us a bit more confidence on both the CCI and the price in a bullish momentum. But at the moment, neutral to bearish at the moment on the daily. Going to the hourly chart, we take short trades based on the daily. So here on the hourly, it's fresh breakout to the downside on the price, and it's also below the moving average range of the CCI. And that was after this bearish divergence we had back here, higher higher highs on the price versus lower highs on the CCI. And I've drawn a target range there, 23-38% range, and that was measured with a Fibonacci from that high to that low, 23-38% range, and it's currently still fluctuating in that range as we record. So again, based on the daily chart, we go short from about the 5th of August. You can see there again, following the same methodology, whenever both the moving averages of the price and the CCI are in decline, take short trades, and when they start rising, you avoid trading or close out your short positions. And you can see there I had a few drawdowns there with the price moving against you up until where we are at the moment. Again, with that bearish divergence, that gave you an opportunity to go short during that little period there. Now that would have averaged down a couple of times there with a very small retrace. At the moment, you'd still be up and opening up new trades like it is at the moment to go short. If you're interested in trading shares, why not subscribe to the Patreon page? We do a weekly bullish share run, and these are some of the trades we've taken in the last month, and it's generated 9.65% in about 30 days of trading. These are all closed positions, and we've got a couple of positions open which are still in play. So again, reference the Patreon page, links in the description below to get access to that. Also hit that like and subscribe button to support the channel. Thanks for watching, and see you in the next update.